All right, let's dive into National Bank Holdings, ticker NBHC. Their Q4 2025 earnings just dropped, and on the surface, it looked like a really big miss. But, management is telling a completely different story. So let's break down what's really going on here.
So here's what we're going to do. We'll start with those headline numbers that really hit the stock right away. Then we're going to deconstruct what management called a noisy quarter. After that, we'll look at their big plan for 2026, check out the story and potential catalysts, and finally, I'll give you our take, our prediction, our rating, and even a trade idea.
Okay, let's just rip the Band-Aid off and get right to the numbers. To put it bluntly, these were not what Wall Street was hoping for, and the market's reaction was, well, it was pretty brutal.
Yeah, there's just no other way to put it. This was a huge miss. GAAP earnings per share came in at just 42 cents, when the consensus was looking for 87 cents. I mean, that's less than half. And revenue fell short by almost $7 million, a clean miss on both the top and the bottom line.
And here you see the market's instant verdict. The stock was down almost 4% in pre-market trading. This was before management even had a chance to get on the conference call and explain things. So you can tell these numbers really spooked investors right out of the gate.
So what on earth happened? Well, let's dig into management's side of the story. They basically framed this whole quarter not as a mistake, but as a deliberate, strategic cleanup job.
And here is where the whole story just pivots. The CEO, Tim Laney, came out and said, look, our goal was to enter 2026 with a clean slate. The message was crystal clear. This wasn't some accident. It was a choice. They decided to take all their medicine in one go, right here in Q4, to clear the decks for the new year. So what was all this noise they're talking about? Well, here it is. They had over $4 million in acquisition-related costs. They took a $2.6 million loss on selling some securities, and this one's really important. They set aside specific reserves to finally deal with some old, lingering problem loans. Now, if you adjust for all that, the EPS looks a bit better at 60 cents, but let's be honest, that's still way below what analysts were expecting.
But, and this is a huge but, despite that ugly earnings number, the bank's foundation is an absolute fortress. Just look at their CET1 ratio, 14.89%. For a bank, that is exceptionally strong. It means they have a massive capital buffer and incredible financial flexibility, no matter what they just printed for the quarter.
Okay, so the slate is now clean. The balance sheet is strong. Management immediately pivoted the conversation to the future, so let's look at their pretty ambitious plan for 2026.
Now, this is really the heart of the bull case for the stock. They're guiding for some pretty impressive loan growth, about 10%. They see their net interest margin holding stable and strong right around 4%. But, and this is key, they're also guiding to a higher expense base, somewhere in the $320 to $330 million range. That's definitely something we've got to keep an eye on.
So how are they going to hit these big numbers? Well, their strategy really comes down to two things. First, you've got the Vista acquisition. This move immediately gets them into some of the hottest, fastest-growing markets in the country, like Texas and Florida. And second, there's their in-house tech platform, 2UniFi. Think of this as their long-term bet on becoming the go-to digital bank for small businesses.
And that 2UniFi platform, well, it brings us to the big wild card in this whole story. Right now, it's costing them about $22 million a year to run. Management has been very open that they're looking for a partner to help scale it up and, more importantly, bring that cost down. So the billion-dollar question for investors is, can they land a partnership in 2026? And will it be big enough to make a real dent in that expense line?
Okay, let's connect all this back to the stock itself. Because even with management's grand vision for the future, you can tell that investors are very much in show-me mode right now, especially after the year this stock has had.
I mean, this chart really says it all, doesn't it? Over the last year, the S&P 500 is up over 16%. Even the regional bank ETF is up more than 10%. And NBHC, it's down almost 6%. It has been a massive laggard, and you can see why investors need to see some proof that this turnaround is for real.
So what could actually change the narrative here? Well, here's what to watch for. First, they have to deliver on the Vista acquisition and show real growth from it. Second, any kind of 2UniFi partnership announcement would be a huge deal. We'll also be watching to see if their margins hold up. And finally, how aggressively they use that new $100 million stock buyback they just announced.
All right, time to put it all together and look ahead. Here's our prediction for the next quarter, our official rating on the stock, and a specific trade idea for you to think about.
For the first quarter of 2026, we're modeling earnings somewhere between 80 and 85 cents. That reflects the first full quarter of contribution from the Vista deal, but also factors in those higher expenses. We're looking for a strong start to loan growth from those new markets, and we think their net interest margin should hold steady right around that 4% level they guided to.
So, based on all of that, our official rating on National Bank Holdings is market perform.
And here's why. The long-term story they're telling, it's really compelling, but right now, the execution risk is very real. And those higher expenses they've guided to for 2026, that really puts a cap on how high earnings can go in the short term. We basically expect the stock to trade sideways, kind of in a holding pattern, until one of those big catalysts, like that 2UniFi partnership, actually happens.
So, is there a way to trade this? We think so. Here's an idea, a pair trade. You go long NBHC stock, but at the same time you short the regional bank ETF, KRE. The whole thesis here is that if the economy starts to get worse, investors are going to rush to quality. And with its fortress balance sheet and that massive capital ratio, NBHC is a defensive standout. It's perfectly positioned to outperform its weaker, less capitalized peers in a downturn. So that's our deep dive on National Bank Holdings' very eventful quarter. We'll be keeping a close eye on those catalysts, and as always, please remember, this is not financial advice.